Good morning, students. I am C. Ankit Sharma, your income tax faculty. And today we will be discussing our last session for capital gain purpose. Fine. This is our last session for capital gain topic. In today's topic, we are going to discuss the exemption last section, that was section 54F. Except that we are going to discuss the tax calculation procedure in respect of different kind of capital gain. That is short-term capital gain under section 111A, then long-term capital gain under section 112A, normal long-term capital gain, normal short-term capital gain, and etc. And also we will cover the test your knowledge question, our MCQ, and other illustration. So once again, I welcome you all in our last session of capital gain. And I believe that you all are studying very, very hard. And you all are focused to get your goal. That is to become a chartered accountant. So before starting the class, just a second. Take the Good morning, wishes. Good morning, Suprabhat, Sat Sri Akal, Namaskar, Vanakkam, Kem Cho, Subha Bakhair to everyone. Kiran Shukla, Parth, good morning. Coconut, Mohammad Akif, Santige, Tumpa Sen, Monica, Lokesh, Manohar, Akram, good morning. Kadambari, good morning. Neha, good morning. Gopi, Mukteshwari Solanki, good morning. Rohan Kumar, Mamta Yadav, Swati Pandey, Sampurna, good morning. Sir, please explain capital gain page 3.413. Deemed full value of consideration in case of slum sale, FMV1 and FMV2, because in illustration 10, SC is 30 lakh, not 25 lakh. Okay, we will discuss that. Next, Santosh, good morning. Shreyas, Komal, Sakshi, Mansi, Anirudh, etc. Malvika, Hemlata, Navneet, everybody have a very, very good morning. So, capital gain page number 3.413, deemed value of consideration. So, are you asking Miss Sampurna, good morning, you are asking capital gain page number 3.413, deemed full value of consideration in case of slum sale. FMV1, FMV2, because in illustration 10. So it is your two separate queries or it's a combined queries regarding slum sale. So kindly let me know. And please ask this query after 30 or 40 minutes again. So when we will take the queries of other students also, then I'll take up this query also. Okay. So let me complete section 54F. That is our last exemption regarding the capital gain investment scheme provisions. Before that, of course, here is the thought for the day. Okay, before sharing with you the thought for the day, can you tell me what is the opposite of success? What is the opposite of success? So, what is the opposite of success? So, the opposite of success means, can anyone tell me what is the meaning of opposite of success? Very simple. It's very, very simple. The opposite of success, generally, yes, somebody is saying failure. Prantinde Vidhate is saying failure. So generally, we believe that the opposite of success is failure, or we can say the opposite of failure is success. But we can have a other point of view also regarding that. So this is our thought for the day, and it says failure is not the opposite of success. It is part of success. If you think about it, you will feel that how correct is this? Failure is not the opposite of success. But for the purpose of your journey, for the purpose of your life, you can feel that it is not opposite of success. That is just because of the language, what we learn actually. But in practical, you can feel that it is a part of everyone's success. If somebody is successful today, he definitely has some failures in the journey of to become successful. So if you will read it and you will try to understand this thought, you will feel that it is absolutely correct. If anyone in your life is successful, then the failure is not the opposite of it. His journey, that is going to be the part of his journey. So never, never, never fear from the failure, because it is a part of our journey to become a successful person. So that was the thought for the day. And in my opinion, it's a very, very nice thought. Okay, next, moving on to provision section. Section 54. F we are about to discuss. Before that, we have discussed section 54 exemption, which was regarding transfer of residential house and investment in another residential house. Then section 54B, that was regarding transfer of agricultural land and purchase the new agricultural land. In that case, the agricultural land should be in urban area, what we were transferring. And the agricultural land we are going to purchase, it can be in urban area or rural area. Next was section 54D, which talks about transfer of land and building during compulsory acquisition of a industrial land and building, and then reinvestment in another land and building for industrial purpose. So you can get the exemption under section 54D. 54 EC talks about that any land and building or both, which should be long term, transferred, and you have to purchase specified bonds, which is specified by government, having a maximum exemption limit of 50 lakhs. So in section 54, the maximum exemption limit is 10 crore. In section 54 EC, there is a maximum limit of section exemption is 50 lakh. So in section 54B and 54D, there is no as such restriction regarding the exemption limit till now. Then in case of 54 EC, the time limit is only 6 months for the investment. In the first section 54, we have the time limit for exemption is 1 year, 2 year and 3 year. In exemption number 2, 54B, we have only 2-year time limit to purchase another agricultural land. And for section 54D, we have the time limit for 3 years, whether for purchase or construction of a new industrial undertaking, land and building. So till here, we have discussed the provision. The last exemption, that is section 54F, now we are going to discuss. And it says, any long-term capital gain. You can see it's a very different kind of heading. Section 54F says that any long-term capital gain other than a residential house, that means it says any long-term capital gain other than residential house. So it could be a long-term capital gain of shares, debentures, land, jewelry, etc. Any kind of long-term capital gain except residential house. Fine. So that means if I have a capital gain of long-term regarding shares, so that can be eligible. And what I need to purchase, I have to purchase or construct a new residential house. So you can see why residential house has been excluded from the transfer condition. Because if we transfer a residential house and purchase or construct another residential house, clear? If we transfer a residential house and purchase or construction residential house, then we have already section 54 is there. So those, if there will be residential house also included for the purpose of transfer, then there will be same purpose, there will be two exemption, section 54 and 54F. That's why 54F has been made for those person, for those assessee who do not have a residential house or who do not want to transfer their residential house but want to purchase a residential house. So you should understand section 54 and 54F nature difference. 54 says if you transfer a residential house and if you purchase residential house or construct, then section 54 says I am there to give you exemption. But section 54F says any long-term capital gain except residential house. Why except residential house? Because we have to purchase or construct residential house under section 54F also. So if the residential house also been included for the purpose of transfer, then section 54 apply, 54F cannot be applied. So in that case, section 54F specifically exclude for the purpose of transfer any residential house. So if you transfer shares, debentures, land, jewelry, any other long-term capital gain, then you can invest it to purchase a new residential house. And in that case, you will get the exemption under section 54F. So always remember, if you transfer residential house and purchase residential house, then section 54 apply if other conditions satisfied. And if you transfer any other long-term capital gain and purchase the residential house or construct it, then section 54F provision will be applicable. Clear? So any long-term capital gain other than the residential house, then you have to purchase or construct a residential house. Only one in India. For section 54F, there is only power to purchase one residential house. There is no concept of two residential house purchase as in case of section 54. Assessee will always individual HUF if their residential house or land provision. Time period should be long term because we need long term capital gain also. Now there is a new condition. In all other exemptions, the previous 4 exemptions we have discussed, in all cases, amount of exemption was amount of investment. This was in all other 4 cases. Whatever you will invest, you will get the exemption, subject to the maximum limit if any specified. For example, section 54 having 10 crore, section 54 EC 50 lakh, but there is no proportionate exemption concept. The amount you are going to invest, you are going to get the exemption up to the amount of capital gain, subject to the maximum limit. But under section 54F, you will not get complete exemption. For example, under section 54 EC, if you invest 10 lakh rupees and the capital gain is 12 lakh, so you will get the exemption of full 10 lakh. Yes, if you invest 10 lakh rupees but capital gain is only 8 lakh, then you can claim the exemption of 8 lakh rupees. If the capital gain is 60 lakh and you invest 55 lakh, then you can only claim 50 lakh because maximum 50 lakh allowed. So in other exemption, there is no proportionate exemption concept. You will get the full amount of exemption if it is compiled with the maximum exemption limit. But section 54F is having a special provision. For the purpose of exemption, there is a special provision like this. You are going to get a specific exemption according to a proportionate formula. And the formula is very important. You will use this formula everywhere in section 54F. If you want to find, suppose, for the purpose of finding exemption, exemption is equivalent to investment amount in normal exemptions. Section 54, 54B, 54D and 54 EC. What is the exemption? The investment amount, subject to the maximum limit. Clear? If I'll ask you, what is the unutilized amount taxable? If you have deposited the amount in the scheme CGAS and you did not utilize it till the time duration. So what is the unutilized amount taxable? The provision says unutilized amount taxable will be the unutilized amount. Simple. There is no special provision. What is misutilized amount is going to be taxable, or how much misutilized amount going to be taxable in this section? So it says misutilized amount. There is no formula. But under section 54F, it says when you need to find out the exemption, then you have to apply this formula. This formula says original capital gain upon net sale consideration multiplied by investment. So in other case, the investment amount is the exemption. Now we have to multiply this proportionate value to find out the exemption to the investment amount. So this investment and this is same, but this is the new thing, which is inserted in section 54F. Because we are not going to give you full exemption under section 54F. Now, if we need to find out the unutilized amount taxable, the good thing is we just need to follow the same formula. Original capital gain upon net sale consideration. And in normal case, we just equivalent the unutilized amount is unutilized amount taxable. We need to multiply this value, unutilized amount, with this formula. You will get the unutilized amount taxable. In the same way, misutilized amount taxable. The provision says original capital gain upon net sale consideration into misutilized amount. So the good thing is the same proportionate value need to be multiplied. When you need to find the exemption, you have to multiply it with the investment value. When you need to find the unutilized amount taxable, you have to multiply the same formula with the unutilized amount. And if you need to find out the misutilized taxable amount, then you have to multiply the same formula with the misutilized amount. Clear? The investment amount can be maximum only 10 crore. Because we are talking about investment in residential house. And for the purpose of residential house, there has been amendment in section 54, which says that exemption cannot exceed 10 crores. In the same way, the investment cannot exceed 10 crore rupees in case of section 54F also. So we can say, whenever you need to find any amount in section 54F, then you have to multiply this proportionate value, which is original capital gain upon net sale consideration. Clear? We will solve an example also for this, so you will able to understand the provision very clearly. For the time being, you should just understand one thing, that under section 54F, for the purpose of exemption, we need to follow original capital gain upon net sale consideration into investment amount. However, if the cost of new residential house amount invest in new residential house exceed 10 crore, the amount exceeding 10 crore would not be taken into account for the purpose of exemption. That means the maximum investment amount can be only 10 crore also in section 54F. Okay. Now the other condition. Now it's simple, almost similar like section 54. So it says, point number 4, condition, assessee should not own on the date of transfer of original asset more than one residential house, other than residential house for which exemption claimed in India. So at the time of transfer, what we are transferring? We are not transferring residential house. So at the time of transfer, assessee can have one extra residential house. Other than that, for which exemption is going to be claimed. Okay. So if we talk about condition number A, it says that suppose the transfer date is 21st December 2023 and we are transferring shares. We cannot transfer residential house under section 54F because if we transfer residential house and going to purchase another residential house, then section 54 talks about it. Okay. So we are transferring shares and we are going to buy a new residential house for the purpose of exemption. So if you want to purchase the residential house for the purpose of exemption, it's okay. So at this time, you can have only one extra house. So Mr. A, suppose having one residential house already, now he's transferring shares to purchase a new residential house. So this is allowed. Condition A talks about this, that at the time of transfer, you can have one extra house, except that for which you are going to claim the exemption. Suppose if Mr. A having two residential house at the time of transfer, and he needs to purchase another residential house after transferring shares, then exemption cannot be claimed. So there can be only one extra residential house for claiming exemption under section 54F. That was condition number A. Now B says, assessee cannot purchase within 2 years or construct within 3 years from the date of transfer any other residential house. Now suppose, condition A clear? Now condition B, it says suppose at the time of transfer, that is 21st December 2023, Mr. A is transferring shares and going to buy a residential house for the purpose of exemption. So Mr. A was having already a residential house. We have discussed that he cannot have more than one residential house at the time of transfer. So he can claim the exemption under section 54F. Condition A has been satisfied. Now condition B says that once you claimed the exemption, now you cannot purchase any new residential house for next 2 years from the date of transfer, and you cannot construct new residential house up to 3 years from the date of transfer. So there will be a lock-in after claiming exemption under section 54F. There is a lock-in which says that now you cannot purchase any other residential house or cannot purchase or cannot construct within 3 years. If you'll do that, then whatever exemption you have claimed earlier is going to be taxable. Now the interesting point, you can see in the condition A, we saw that you cannot have 2 over here and 1 here. So we were seeing that you cannot have 3 residential house. But suppose if assessee do not have any residential house earlier, suppose on 21st December, he transferred shares and bought a residential house and claimed a exemption. He did not have any other residential house. Suppose even now, once you claim the exemption, you cannot purchase or construct another residential house within 2 years or 3 years from the date of transfer. Now, this is very interesting. If you have already having one residential house, and you claimed exemption, you cannot purchase or construct any new property. But even if you do not have any residential house, but purchased a residential house and claimed exemption under section 54F, even then you cannot claim exemption, you cannot purchase or construct new property between 2 or 3 years. So condition A and B. So A says when you cannot claim exemption, suppose if you already have 2 residential house and now you want to transfer your shares and wants a new purchase of residential house, then you cannot claim the exemption because you already have 2 residential house. That can be maximum 1. Condition B says you have one residential house or you are having no residential house. But now you transfer shares and purchased a new residential house and claimed exemption section 54F. That is allowed. You have claimed because you have only one residential house or no residential house. But once you claim the exemption, now for next 2 year or 3 year, you cannot purchase or construct any other residential house. If you do so, then the exemption you have claimed earlier is going to be taxable again. So, assessee cannot purchase within 2 year or construct within 3 year from the date of transfer any other residential house. Otherwise, what will happen? Otherwise, capital gain exempted earlier will be taxable as long-term capital gain in the year in which such new property has been purchased. Now the time duration of point number C, exactly the same as per section 54. Either you can purchase 1 year before the date of transfer, exactly same as per section 54. Within 2 year after the date of transfer, you can purchase or construct within 3 year after the date of transfer. Same B condition, newly acquired property cannot be transferred within 3 years. In all section, the duration, the restriction is for next 3 years except section 54 EC. In section 54 EC, it is within 5 years. B point, if you transfer the newly acquired house property within 3 years, then what will happen? Exactly the same concept as per section 54 EC. For section 54, 54B and 54D, we have discussed that in those 3 cases, if you transfer the new property within 3 years, then the cost of acquisition of that new property is going to be reduced by the amount of exemption earlier. But in section 54 EC and 54F, if you transfer property within 5 years or 3 years, then cost will not be reduced, but the capital gain exempted earlier is going to be taxable with same nature. If newly acquired residential house property transferred within 3 years, capital gain exempted earlier will be charged to tax as a long-term capital gain in the year of transfer. If amount not utilized, same point number 5, then you have to invest it up to the due date of ROI in the capital gain deposit scheme, account scheme, CGAS. And if the misutilized amount is there or unutilized, then you can see due to the help of the same formula, the proportionate value is going to be taxable. Okay, that was section 54F. So let me explain this section 54F some condition in Hindi also. So the Hindi medium student will get to know exactly what's need to be done. तो 54F कहता है अगर आपका कोई भी लॉन्ग टर्म कैपिटल गेन है अदर देन रेजिडेंशियल हाउस, जो रेजिडेंशियल हाउस पर नहीं होना चाहिए, उस गेन से अगर आप एक नया रेजिडेंशियल हाउस खरीदते हैं या बनवाते हैं तो आप एग्जेम्पशन 54F में ले सकते हैं. क्योंकि अगर रेजिडेंशियल हाउस बेचकर आपने रेजिडेंशियल हाउस बनवाया या खरीदा तो उसके लिए सेक्शन 54. इसीलिए 54F उन केसेस में एग्जेम्पशन देता है जब बेचने वाली एसेट लॉन्ग टर्म हो अदर देन रेजिडेंशियल हाउस. ये बेनिफिट इंडिविजुअल एचयूएफ को मिलेगा, एसेट लॉन्ग टर्म होनी चाहिए, एग्जेम्पशन मिलेगी प्रोपोर्शनेट. 54F में चाहे एग्जेम्पशन निकालनी हो, चाहे अनयूटिलाइज्ड अमाउंट टैक्सेबल निकालना हो या मिसयूटिलाइज्ड अमाउंट टैक्सेबल निकालना, हमेशा फॉर्मूला एक प्रोपोर्शनेट फॉर्मूला उससे वैल्यू में निकालने में हेल्प करेगा. द फॉर्मूला विल रिमेन सेम, दैट इज ओरिजिनल कैपिटल गेन अपॉन नेट सेल कंसिडरेशन. आप उसे मल्टीप्लाई करेंगे इन्वेस्ट अमाउंट से तो एग्जेम्पशन निकल आएगी. आप उसे मल्टीप्लाई करेंगे अनयूटिलाइज्ड अमाउंट से तो अनयूटिलाइज्ड टैक्सेबल अमाउंट आ जाएगा. आप उसे मल्टीप्लाई करेंगे मिसयूटिलाइज अमाउंट से तो मिसयूटिलाइज टैक्सेबल अमाउंट आ जाएगा. जैसे 54 में 10 करोड़ की मैक्सिमम लिमिट थी, एग्जैक्टली द सेम लिमिट एप्लीकेबल ओवर हियर. कंडीशन ए और बी। कंडीशन ए कहती है एग्जेम्पशन तभी मिलेगी जब जिस घर के लिए आप एग्जेम्पशन लेना चाहते हैं 54F में, आपने शेयर्स बेचे हैं और आप एक नया घर खरीदना चाहते हैं या बनवाना चाहते हैं, जिसके लिए आप एग्जेम्पशन क्लेम करना चाहते हैं, उसके अलावा आपके पास सिर्फ एक ही एक्स्ट्रा रेजिडेंशियल हाउस होना चाहिए। मैं आज शेयर्स बेचकर एक नया रेजिडेंशियल हाउस खरीदना चाहता हूं, तो एग्जेम्पशन मिल सकती है अगर बाकी कंडीशन पूरी हो, लेकिन मेरे पास पहले से ही दो रेजिडेंशियल हाउस हैं पुराने, तो मैं एग्जेम्पशन नहीं ले सकता, कि कंडीशन ये कहती है पुराना आपके पास एक्स्ट्रा सिर्फ एक हाउस हो सकता है, एक पुराना और एक वो जिसके लिए एग्जेम्पशन ले रहे हैं। अगर पहले से ही दो हाउसेस हैं तो फिर एग्जेम्पशन आपको नहीं मिलेगी। बी पॉइंट कहता है एक बार एग्जेम्पशन वाला हाउस आपने कंस्ट्रक्ट या परचेज कर कर अगर एग्जेम्पशन ले ली, या स्कीम में पैसा जमा कराकर 54F में एग्जेम्पशन अगर आपने ले ली, तो फिर नया कोई दूसरा हाउस अगले 2 साल या अगले 3 साल में आप कंस्ट्रक्ट भी नहीं करा पाएंगे। चाहे पहले से आपके पास एक भी हाउस नहीं है, आपने एक नया घर खरीदा, उसके लिए एग्जेम्पशन ली, तो कितने घर हैं आपके पास? सिर्फ एक एग्जेम्पशन वाला। तो एक बार एग्जेम्पशन क्लेम हो गई तो अगले 2 साल तक लॉक लग जाएगा कोई भी नया घर खरीदने या बनवाने के लिए 3 साल तक। पहले से एक घर है पुराना और हमने एग्जेम्पशन के लिए एक और घर लिया, अलाउड है, ये कंडीशन पूरी। लेकिन जैसे ही एक घर के लिए एग्जेम्पशन ले ली नए वाले के लिए, तो भी एग्जैक्टली फॉर नेक्स्ट 2 ईयर और 3 ईयर यू कैन नॉट परचेज और कंस्ट्रक्ट फ्रॉम द डेट ऑफ ट्रांसफर। ठीक है, नया घर खरीदने और बनवाने का टाइम एग्जैक्टली कॉपी पेस्ट वही है जो 54 में था, और नई प्रॉपर्टी आप बेच नहीं सकते 3 साल तक। अगर आपने बेचा तो पुराना जो गेन एग्जेम्प्ट हुआ था वो टैक्सेबल कर दिया जाएगा, स्कीम में पैसे जमा करा लीजिए, और जो मिसयूटिलाइज्ड या अनयूटिलाइज्ड है दैट इज गोइंग टू बी टैक्सेबल प्रोपोर्शनेटली। आई होप इट क्लियर। Now there was some clarification. These clarification point number 1, 2, 3 example we have discussed. This was related to section 54. Clear? Now the notes for section 54F. The net consideration in excess of 10 crore would not be taken into account for the purpose of deposit in CGAS. Maximum deposit can be 10 CR. The second point exactly repeat the same thing. Amount utilized by SSE for purchase or construction of a new asset, the amounts of deposit shall be deemed to be the cost of the new asset, and this cannot exceed 10 CR. The example exactly same as we discussed in section 54, but in this section 54F, the exemption will be proportionate. You can see case number 1, net consideration is 15 crore. 15 crore, okay. Long term capital gain is 7.5 crore. Investment is 12 crore. So maximum investment will be restricted till 10 crore. Now for the purpose of exemption, we will apply the formula which says original capital gain, that is 7.5 crore, original capital gain upon net sale consideration into investment. Clear? So 7.5 crore upon net sale consideration, that is 15. And multiplied by the amount of investment, which can be maximum in this case is 10 CR. In second example, again the cost is 15 crore, but it will restrict to 10 crore. Same formula, original capital gain upon net sale consideration multiplied by investment amount. Third is 12 crore gain, investment is 8 crore. So you can claim the exemption by taking 8 crore for the purpose of investment. Same formula. So these are exactly the same cases. Now examples again regarding this, you can read it. Of course, exactly the same examples as there has been given in this table. Consequences we have discussed. If you purchased another new house within 2 years or construct within 3 years a new house, the gain which has been exempted earlier is going to be taxable again. Point number 4, talks about section 54 and 54F, and it again says the same thing, that is section 54 and 54F. In both cases, the maximum benefit is 10 CR for the purpose of investment. 54H is a new point. It's a new section. And it was very important section. Now you have seen that in all exemption, the investment, whether it's for 1 year, 2 year, 3 year, or it's 2 year, or it's 3 year, or it's 6 months, etc. So in all these exemption, there is the investment criteria which is connected to the date of transfer. Now one practical problem was arised in case of compulsory acquisition. In case of compulsory acquisition, there is a practical problem arise. Do you remember the compulsory acquisition, section 45(5)? In that case, what exactly happens? Suppose there is Mr. A who is having a building, a residential house. The government compulsory acquired it. Suppose on today. And decide the OC will be 80 lakh. But government did not paid it yet. They will pay it later. And the payment has been received, suppose on 10th November 2025. So generally, practical life, it happens. Now for the purpose of capital gain, transfer year is this. Because compulsory acquisition is equivalent to transfer. And SSC will get 80 lakh rupees in 2025. Now what will happen? We will charge the capital gain in assessment year 2026-27 because the chargeability will be deferred for the year in which the compensation received. So there will be sale consideration, which is 80 lakh. Suppose index cost of acquisition, suppose, assume that comes 45 lakh. So 35 lakh was my long-term capital gain on residential house. Now I want to purchase a new residential house. Either I have to pay tax on this. I do not want to pay tax on this 35 lakhs. So I decided to purchase new residential house. To claim exemption. And now I want to purchase a new residential house. So can anyone tell me in which section he is eligible to get the exemption? Whether under section 54, under section 54B, or section 54D. So if his residential house has been compulsory acquired by government and now he got the compensation in 2025. So if he wants to claim exemption by purchasing a new residential house, then in which section he can claim the exemption? That could be claimed under section 54. So do not get confused that we are saying it's compulsory acquired. So some student might be thinking that section 54D talks about compulsory acquisition. No, it is a compulsory acquisition of factory building. And we have transferred our residential house and we want to purchase another residential house. So section 54 will apply because transfer includes compulsory acquisition also. That also we have discussed earlier. But now the problem arises. For the purpose of investment, the time limit is due date of ROI and due date of ROI of transfer year. And transfer year is not 26-27 assessment year. Agar we are talking about as per the provision, the technical provision, it says the limit of 2 year or 3 year or to deposit into the scheme will be calculated from the transfer provision. So as per the transfer, the due date of ROI will be 31st July 24 or 31st October 24. And both up to these date, either you have to invest actually going to purchase a property or you have to invest in this deposit in the scheme of capital gain account scheme. Till this date, you have to do this because as per exemption provision, all exemption time duration, 1 year, 2 years, 6 months or ROI scheme is from the date of transfer. In the case of compulsory acquisition, the transfer date is 21st December 2023. So till this date, you have to invest. But what is the problem? Because we do not have money, we got the money in next 2 year, after 2 years. So we do not have money. So how we can invest up to 31st July 24? हमें पैसा मिला है 2025 में और प्रोविजन कहते हैं कि अप टू द डेट ऑफ ट्रांसफर दैट वाज टेक्निकली वी आर टॉकिंग अबाउट 31st जुलाई और 31st अक्टूबर आपको इस डेट तक इन्वेस्ट करना था यू हैव टू इन्वेस्ट अप टू जुलाई 24 और अक्टूबर बट वी डू नॉट हैव मनी सो हाउ वी कैन इन्वेस्ट so in all cases of compulsory acquisition this problem will arise that technically we will get the money later and when we try to invest as per the year in which we got the money, the time duration for the purpose of investment which has been prescribed as per exemption provision will always lapse. So how this is possible that when I will get money in 2025, so I can go back as with the help of a time machine, we will make a time machine and then we will go back to in 24 and we will invest it. So this cannot be possible. So section 54H is a clarification provision and which says that in case of compulsory acquisition of the original asset, where the compensation is not received on the date of transfer, the period available for acquiring a new asset or making investment in CGAS under section 54B, D, ECF would be considered from the date of receipt of compensation and not from the date of transfer. So now under section 54H says that in case of compulsory acquisition for the investment purpose, the time limit will not be considered from the date of compulsory acquired property, but it will be calculated from the date of compensation received, whether it's original compensation or is enhanced compensation. Okay, so that was a clarification section 54H. 54H is not an exemption. Exemption has been over. That was last section 54F. 54H is just a explanation. It's a clarification provision. The same problem you are going to face in case of conversion of capital asset into stock in trade also. You will have to face, you are going to face this problem also same in case of conversion of capital asset into stock in trade because you will get the money when you will transfer the stock. But the transfer date will be assumed as the conversion date. So you can take the same benefit in case of also conversion of capital asset into stock in trade. Example is there for section 54F. We will discuss that example, but before that, let me take query. Next is Miss Priya. Warm morning, sir. This is my first live session, but I have watched your all previous lectures. You are just amazing personality. Thank you so much, Priya. Santosh Das is asking again, which is something out of my syllabus. He's asking, Sir, how to go for national rank in C exam? Study, study more, study continuously. That's the only way. We do not have escalators. We have to take the stairs. So study hard as you can, and you can get the rank. Okay. So next is Mr. Rahul Sharma is asking something. Sir, what happened when an assessee lives in a rented house and do not have any residential house at the time of transfer of asset in section 54F? If you do not have any residential house and you are living in a rented property, then you have to transfer any property other jewelry, shares, land, etc. And after that transferring, you can go for a new property purchase, and in that scenario, you will get the exemption. Next is, sir, what happens? Ruturaj is asking, in following case, the assessee owns one residential house and another residential house that is under construction at the time of claiming exemption. If the assessee does not own any residential house, another residential house that is under construction at the time of claiming exemption. So we consider any property as residential house when it has been completed. So if it is under construction, that will not be treated as a residential house. So he can claim the exemption because he is technically only having one residential house, which has been completed. So we call any property a house or a building technically when it has been completed. So in your case number one, he can get the exemption, of course, because technically he has only one residential house, which is completed. Another is under construction, that will not technically a house. And if SSC does not have any residential house, again, in the same way, that will be considered that he does not have any residential house, so can get the exemption. Okay. So the concept is this: until the property has been completed, it will not be considered as a residential house. And this you could understand also from the point of view of income from house property. When we discuss the provision of pre-construction period interest, from the year in which property has been completed, only from that year we can claim the pre-construction period interest exemption, interest benefit. So till the property is under construction, we do not treat it as a house property. From the year it has been completed, only from that year the income from house property provision has been applicable. Okay. Next is Sankaran. Sir, if SSC already owns a residential house, got with tax exemption, whether he can claim exemption under residential house under section 54F. So if that is a different previous year, you can get the exemption. But the maximum exemption could not be two. But in your case, it is the second condition B, which has not been fulfilled. So if he has already got an exemption based residential house, even in earlier previous year, and the 2 years or 3 years has not been elapsed, then you cannot claim the exemption of next residential house. So your query falls under condition number B, and which is technically not fulfilled. So if you have already a residential house and 2 years and 3 years has not been passed, then you cannot claim the exemption. But if the 2 year, 3 years has been passed, then you can get the exemption, not an issue. Next is Devinder Singh, if a builder construct multiple tower of flats when completion is over and flats are not sold, in this condition, what will be tax liability under income tax had income from house property? Mr. Devinder Singh, we have discussed this provision in income from house property. So you can kindly go back on YouTube, find the lecture on income from house property, and kindly watch the topic when we discussed about it. In that scenario, that is a stock in trade, and for 2 financial years, it will not be treated as deemed let out. So this is going to be taxable from the third financial year, but in detail, kindly refer income from house property lecture. Okay. Next is Parthstrik is saying, sir, in section 54, only capital gain in CGAS, but in section 54F, net sale consideration in CGAS. In section 54 and 54F, they almost talk about same provision. It says, for the purpose of getting the benefit under section 54, you have to invest only that amount, that is the capital gain value. So if you are able to invest the capital gain amount in the new residential house under section 54, you will get the full exemption. Because 54F is connected with a proportionate formula, then you will get the full exemption only when you will complete, you are going to invest the complete consideration into the CGAS. You will see that when we will solve this example, which is on your screen. When we will solve it, you will find out what is the difference between 54 investment and 54F. Next is Retro Banerjee. Sir, if another residential house is constructed within 3 years, the exemption amount in this case will also be taxable as long-term capital gain. Yes, Mr. Rito Banerjee. If within 3 years you completed construction of a new property after claiming exemption of section 54F, then whatever exemption you have claimed under section 54F, that is going to be taxable again. Okay. Next is Rehan Naik. When is the next TYK session? Today only, Mr. Rehan. Just have patience. Parth Rana. Okay, you got the point. Okay. Rahul Sharma. When the time machine would be invented, the most of the IT sections will be amended automatically. Well said, but no comments. Okay. Harinder Sharma is saying section 54H means when compulsory acquisition section 54H provide only time period benefit of section 54 to 54H. हरिंदर 54H ये कह रहा है कि in case of compulsory acquisition and same provision will applicable for conversion of capital asset into stock in trade. इन cases में transfer year पहले होता है और हमें पैसा बाद में मिलता है. तो क्योंकि पैसा में 2 साल 3 साल बाद हो सकता है मिले, तो आप इन्वेस्ट कैसे कर पाएंगे नई प्रॉपर्टी में? बिकॉज आरओआई की ड्यू डेट तो पहले ही निकल जाएगी उसी प्रीवियस ईयर में जो ट्रांसफर ईयर. तो गवर्नमेंट ने आपके लिए बेनिफिट बनाया है. कन्वर्जन वाले केस में, कंपल्सरी एक्विजिशन वाले केस में हम एग्जेम्पशन के लिए आपका टाइम पीरियड ट्रांसफर की डेट से नहीं, जिस दिन आपको पैसा मिलेगा उस दिन से कैलकुलेट करेंगे. ओके. Sampurna Roy, let's find out the provision. Just a second. Some students wants to discuss the provision regarding study material. Just a minute. Let me find out. So somebody is asking page number 3.413. Let me see page number 3.143. Okay, so who was somebody was asking Sampurna Rai. I can't understand under slum sale fair market value higher of FMV1 and FMV2 that is given on page number 3.413. 3.413 capital gain, deemed cost of acquisition, deemed full value consideration. Fair market value of the capital asset as on the date of transfer calculated in the prescribed manner shall be the deemed to be the full value of the consideration received or accruing. Okay, accordingly CBDT has prescribed that for the purpose of section 50B2, the fair market value of capital asset would be higher, FMV1 being the FMV of value of capital asset transferred by way of slum sale determined on the date of slum sale, and FMV2 being the fair market value of the consideration monetary, non-monetary received or accruing as a result of transfer by way of slum sale. So FMV2, they are saying whatever consideration you are getting, that will be treated as FMV2. Whatever the consideration you are getting in case of slum sale. And the FMV1 is the actual fair market value of that capital asset. So FMV1 is the technical monetary or non-monetary. So they both are different on the date of transfer by way of. But FMV1 is the being the FMV of capital asset. If you are receiving whatever the capital assets transferred by slum sale, you should see whatever it has been written. FMV1 saying FMV of the capital asset. So in case of slum sale, whatever assets we are transferring, you have to find out the FMV of that capital asset that will be given in question. Clear? The FMV, the fair market value of capital asset. Suppose the unit we are transferring and the capital asset FMV, it does not necessary that the balance, suppose FMV of all those assets are 80 lakh rupees. Suppose, so that will be my FMV1. Now, being the fair market value of the consideration, now we are not taking the FMV and FMV2 of the asset. Now we are finding out the consideration market value, whether monetary and non-monetary. That means 80 lakh was the real market value of asset. So that was FMV1. Now, in case of these assets, somebody is going to give us the consideration rupees 50 lakh as monetary and the sum of the non-monetary consideration, some other asset have been also transferred to us. So now we need, let me explain you with an example so you will be able to understand. This talks about, this is the balance sheet. So it says whatever assets are here, you need to find out. Those are going to be transferred under slum sale. You have to find out the FMV of these assets. The FMV of assets. Suppose it's 80 lakhs. So that is my FMV1. Now we have to compare it with the consideration FMV, whatever consideration we are getting. Suppose for the purpose of slum sale, we are getting 50 lakh rupees monetary consideration and some asset. The buyer have provided us some asset also. And it says the total consideration is 90 lakh. So he says 50 lakh rupees monetary and 40 lakh rupees the value of asset is transferred. So we need to find out the FMV of these assets. So whatever he is saying that the value is 40 lakhs for the asset what I am transferring to you. So that will not be taken. We have to find out the FMV of these assets also. Suppose it comes 60 lakh. So consideration is saying I am going to pay you 90 lakh via 50 lakh in monetary and some asset that cost 40 lakh rupees. So we will not take these value as per the consideration suggest. We have to find out the FMV of these assets. So technically, now the consideration will be 110. And whichever is higher, that is the consideration for the purpose of slum sale. I hope you get it. Okay. Anything else? There's one more query, I guess, from the study material where it is. There is two separate consequences, 3.434. Do not, very difficult to take the query study material at the same time. It is 3.434. Which are consequences you are talking about? Consequences where the assessee purchase any other residential house within a period of 2 years or construct of any house within 3 years. The capital gain exempt earlier under section 54F shall be deemed to be taxable, exactly what we have discussed. Consequences: if the new house is transferred within a period of 3 years from the date of its purchase, the gain will arise on transfer of new house, and the cap gain exempted earlier 54 would be taxable as long-term capital gain. It's same thing. It just that if you transfer after 2 years, that it will be a long-term capital asset for the purpose of new property. An indexation will apply, and if it is before 2 years, then in that case, that will be the short-term capital gain. Exactly the same thing what we have discussed. Moving on to our provision. So please do not ask the question from study material. It takes very long time and our flow of study is actually going to break. We have to cover the calculation of tax provision also. So next is concurrence under section 54H. If settlement by government in part in different financial year, then when the amount received you will get in part, you can invest it from the date of the amount received actually. So in case of section 54H, whenever you will receive the amount, whether it's OC or EC in parts, then the investment will be counted from that exact amount what has been received by you in part also. So that will practically arise a problem for the purpose of investment, but we do not have that kind of provision. We have to invest in part and the time period will be calculated from the date the amount received. Next is Hemlata, the section 54. When an individual HUF owns two residential houses will be eligible for exemption, but it does not relate to any compulsory acquisition as you just now discussed in section 54H. 54H do not discuss anything. 54H talks about if there is any compulsory acquisition, then the investment exemption date will be counted from the date of amount received and not from the date of transfer, only for the purpose of investment. For the purpose of investment, the transfer date will be taken from the date the amount received by you. Ruturaj, if assessee has residential house that is under construction at the time of claiming exemption, then after the construction is completed, will the original exemption become taxable? Yes, if it has been completed within 3 years from the date of transfer. Rohan, it means that income tax wants to own maximum two residential houses as in case of self-occupied as well as 54F. Yes, for the purpose of claiming exemption, you should not have more than two residential houses. I have uploaded the charts also. I have uploaded the part 2 provisions also. I uploaded the first MCQ sections also last night. So it will be uploaded soon. Next is Rahul Sharma. Sir, please answer one of my queries also. What happened when an assessee transfers asset and buy a house partially used for residential purpose and partially used for commercial purpose? Let me tell you, Mr. Rahul. If you use a house for commercial or residential, it does not make a difference. It depends in which category you have registered that property, as a residential property or as a commercial property. On the papers, if it has been shown as a residential property, then in that scenario, that will be considered as a residential property. And on papers at the time of registry, it has been passed as commercial, then it will completely will be treated as a commercial property. So for the purpose of practical life, whether you are undertaking some commercial activity in your residential property, but on the papers, if it is a residential activity has been passed, then it will remain the residential property. Next step. Devinder Singh, if I purchase share, I sell them after 30 years and I do not record purchase value nor has any recorded time of purchase. Purchase value is not on my memory also when I sell these shares. And then profit, you have to find out the FMV on 1st April 2001. So you will find the FMV of every share from the stock exchange or from anywhere else. So you will get the FMV, do not worry. Even you do not remember it, it does not make a difference. We have fair market value of every shares, every property in this country. You can find it out. Okay. Now moving on to our question, what we were going to discuss regarding section 54F. Now 54F is a very important exemption. Kindly be focused because 54F, in my opinion, is the most important exemption because it has some specific character. And the specific character is due to that proportionate method. It creates a problem again. It says, please be focused because it's a very important provision. In my opinion, this section has a special kind of treatment. Section 54F, you can transfer any long-term capital gain except residential house, and you have to invest in the residential house. Now, see, suppose Mr. A transferred his shares and land to asset in the same financial year 23-24. The sales consideration from shares was 101 lakh. Expense on transfer 1 lakh. So net sale consideration is 100 lakh. Okay. Now the sale consideration of land, suppose 505 lakh. Expense on transfer is 5 and the net sale consideration is 500. Both are long-term capital asset less index cost of acquisition. Suppose this is 70 lakh. This is having 450 lakh. So we have long-term capital gain. So if I'll ask you that by selling of shares and land both, now Mr. A wants to purchase a residential house. So how much maximum he can invest? How much maximum he can invest to purchase a residential house by selling of these shares and land? So the maximum investment in this residential house can be done by Mr. A's this value 100 plus 500. So he can purchase a new residential house for 600 lakh rupees out of the consideration he received for shares and land, not this 80 lakh. This is only gain, profit. So we can invest what we received. So he received technically the consideration 100 lakh on shares and 500 lakh on land. So technically he has 600 lakh in his pocket. So he can invest to purchase a new residential house that worth rupees 600 lakh. Now suppose he purchased by investing 560 lakh rupees. He invest and purchased a new residential house for rupees 560 lakh. So he could invest for 600, but in examination, whenever there is section 54F question will be there, and there are multiple asset has been sold, and the investment has been made in a residential house. So they are not going to invest the full value. The examiner will always restrict the investment lower than this total consideration. There's a reason behind it. It can be 580, 590, but he will not say that he invest complete 600 for the purchase of new residential house. There is a reason, because if he'll say that full 600 has been invested, then the solution will be easy for you. So to make it some complicated, they will always ask you that full consideration has not been invested. There is 560, 550, 540, 580, 590, 595, or even 599 can be possible. Now the problem will arise. You can see shares is long-term capital gain. An investment has been used to purchase the residential house. So shares is eligible to get the exemption under section 54F because long-term cap gain. Other than residential house, invest in purchase of a residential house. In the same way, land is also eligible to get the exemption under section 54F. So they both will fight. Shares will say, I want to claim exemption under section 54F. Land will say, no, I want exemption under section 54F. तो दोनों में लड़ाई होगी. वो बोलेगा मुझे एग्जेम्पशन चाहिए, वो बोलेगा मुझे एग्जेम्पशन चाहिए. हम एग्जेम्पशन दोनों को दे सकते हैं. They both can claim the exemption. And there would not have been any problem to claim the exemption if that proportionate formula was not in the picture. If that proportionate formula was not in the picture, then we can claim 30 lakh exemption for shares and 50 lakh exemption for land. But due to that formula, due to that exemption formula, now we have to find the ranking, that who will give first exemption and the balance by claim the other one. So we have to find out the rank between shares and land, that who will get the maximum benefit or who will provide the maximum tax benefit if exemption has been provided to them in a specific order. So for the purpose of ranking between shares and land, this will only going to be done in case of 54F. Because all other F section have complete investment exemption, there is no proportionate problem. But because section 54F has a specific character of proportionate provision, then we have to find the ranking. For the purpose of ranking, again, the same formula will help. Original capital gain upon net sale consideration, you just need to multiply it with 100 to find out the percentage. That percentage will help us for the ranking purpose. So for the purpose of shares, the original capital gain is 30, net sale consideration is 100. So my percentage will be 30%. What is the meaning of this percentage? I will explain it to you. For the purpose of land, the long-term capital gain, original gain is 50, the consideration is 500 into 100, so that is 50%. Sorry, 10%. Clear? So technically, shares having 30% ranking percentage and land is just 10%. So who will have the higher percentage will go for the exemption first, and the balance will be provided to the second who will have the lower percentage. What this percentage denotes, what this percentage explain, kindly listen carefully. This percentage says, or the percentage wants to explain that 30% means if you invest 1 rupees, if you invest 1 rupees consideration from shares to residential house, you will get 30% of this 1 rupees exemption. That means we can say 30 paisa will be exempt out of 1 rupees. So if you will invest 100 rupees of shares consideration into residential house, you will get 30 rupees exemption. So if you invest 1 rupee, you will get 30 paisa exemption from the investment of 1 rupees from shares. But if you will invest 1 rupees consideration of land in residential house, you will get only 10 paisa exemption. So who will be give the priority? Of course, who will have the higher percentage is going to be provide the exemption first. So the percentage ranking, this is just for your understanding, that is not need to be shown in the examination. You have to calculate the percentage, the higher percentage you have to rank them. 1, 2, 3, 4, there can be more asset. So now the shares will get the exemption first. Now the exemption formula, that's it. The exemption formula is original capital gain upon net sale consideration into the investment amount. So original capital gain is 30, net sale consideration is 100. Now, how much investment we invest in the property is 560 lakh. So what is the maximum amount of investment we can done with the consideration of shares? Do not write 560 over here. 560 is the consideration combined of shares as well as the land, but we are talking about shares. So how much maximum investment can be done by shares for the purpose of purchasing this property? And of course, it can be maximum 100 because the maximum investment can be the consideration. So if we got 100 lakhs in consideration from the shares, so what is the maximum investment out of this shares into this 560? Or we can say in simple word, what maximum amount of shares is included in 560? That can be maximum 100. So this cannot exceed your consideration value. So full value we invest, and you can see this is my exemption under section 54F in respect of shares. So what was the capital gain? 30 lakh. What is the exemption? 30 lakh. So taxable gain for shares will be nil. Full amount has been exempted because you complete consideration has been invested. So if your full consideration is going to be invested, the gain will be exempted completely. Now out of this 560, 100 lakh has been used. So now balance is 460 and it has been used by land. Total investment what? 560. 100 lakh shares investment we have claimed as exemption. Now balance 460 by which asset? By land, of course. Now the exemption formula will apply on land. Total capital gain 50, original capital gain upon net sale consideration. Land net sale consideration is 500 lakh. But can we write over here 500? No. Because only 460 has been invested. That's why I was saying that examiner will not give full investment in this 600, because if they provide full investment, then what you will do? You will write 500 over here and there will be no capital gain, full exempted. But in this case, that will not happen. Now exemption will be only 46 lakh. So gain was 50. Exemption is 40, 4 lakh will be the answer. That will be your long-term capital gain. So always remember, when you will use the last ranked asset, so the difference, this difference will be there. Always do this in working note. Whatever is the consideration, deduct the value has been used earlier in rank 1. The balance will always come over here. You cannot write 500 over here. That will be the wrong answer. The balance left can be used for the purpose of exemption over here, and this will be your capital gain. That's why section 54F is utmost important, because this character, this ranking method change everything. If there is no this proportionate formula, then there was no problem. We can invest value over here, full 30 lakh or 50 lakh. You can give the exemption without rank, whatever it is, as we do in all other cases. But for the purpose of section 54F, you have to this ranking concept. You have to apply this ranking method. And I have also prepared a solved question for you with the help of 4 assets to make you understand this question, this concept more clearly. You can see we have jewelry consideration 500 lakhs, shares 50, capital index bond and land. Fine. Index cost of acquisition has been given. And this is my long-term capital gain. Now you can see total investment can be maximum 500, 50, 650, 670 lakh. So we can invest maximum 6,70,000, 670 lakh rupees for the purchase of new property. But the property has invested rupees, Mr. X invests 540 lakh in a new residential house. So it is less than 670. It will always be like this. So now all 4 assets are eligible for the purpose of exemption. They all are other than long-term capital gain, other than residential house, jewelry, shares, capital tax bond, and land. So all will be eligible for the purpose of exemption. So we need to do the ranking system. So we have applied the ranking provision. it came with 10%. This is 40, this is 20, this is 75. So 75 will get the first rank. 40 had the second rank. 20% got the third rank, and this is going to have the fourth rank. So the jewelry will get the exemption at last. So first we apply this exemption on land. Original capital gain, net sale consideration, and full consideration is applied for the purpose of investment. So full exempted, nil taxable. And I am reducing this exemption one by one. You can see total was 540, use 20 lakh over here, remaining 520. Now the second is this. Original cap gain 20, consideration was 50. Full we can invest, 20 lakh exempt, nil taxable. So now I reduce 50 lakh out of this 520. Remaining is 470. We will apply 470 on third case. 20 lakh gain, 100 lakh consideration, full 100 utilized. So now remaining is 370 lakh for the last exemption. And you can see over here, net sale consideration, capital gain upon net sale consideration, and balancing figure. This 370 has come from this value. This will apply. We got 37 lakh exempted. And out of this 50, 37 lakh exempted, balance is 13 lakh. Please, I request you all, please try this example after the class once or twice. So this concept of ranking will be clear. This is the best example. In general, in my opinion, there will be 2 asset maximum in the question, but I have made example of 4 assets. So you will completely understand how to follow the provisions. Clarification, this is regarding the 2 crore property clarification. We have discussed it already. That is reference to valuation officer. This is a theoretical provision. You can go through it. You can read it. It's very simple. If assessing officer thinks that the FMV is greater than 15% or 25,000 in comparison to the value declared by you, then that assessing officer can refer your case to the valuation officer. I have made 3 examples also for you. Kindly read this. This example has been framed by me. So if there's any confusion, you can ask me in the next class also. This is a theoretical provision. So exemption has been completed. Just one more clarification regarding the exemption. Then we will move on to our last topic, that is calculation of tax. And that is not that difficult. All the provision we have discussed. You just should remember the basic rate structure in case of default tax regime and optional tax regime. Everything else is simple. For the purpose of exemption, let me give you clarifications also. It will help you. Suppose we have a residential house. We transferred it. And out of the consideration, we purchase a new residential house and also invest in government NHAI bonds. Section 54 EC. Now we have the gain of, suppose, long-term capital gain of 80 lakh. We invest 50 lakh over here and 20 lakh over here. So it does not make any difference. You can give exemption anyhow. It will exempt your 70 lakh rupees gain because there is no proportionate problem. So there is no ranking, etc. apply. But there is a concept always. Whenever you are going to give the exemption, like you can give the exemption 54 EC initially, then you can give the exemption to section 54 later on. You will get the same capital gain, 10 lakh rupees taxable. But always apply this. Always give exemption, first of all, to the specific section and then the general section. Or we can say, first of all, you should provide exemption which is specific and then provide the general exemption. It will not affect your answer, but it will, in some cases, it will help you. So because we have transferred residential house and purchased a new residential house, so that is a specific exemption. Section 54 deals with it. First of all, we will give section 54 exemption, that is 50 lakh rupees. This is a general because it can be availed from any long-term capital gain. So in this exemption, this is specific. So now general will be given always after the specific. Okay, this is a universal rule also. Always apply the specific rule And then the general exemption will be provided. Section 54 EC will be provided after section 54 exemption. So this will be applicable in all cases. Like you have an agricultural land, you transfer an agricultural land and purchase an agricultural land. You also purchase bonds. You also purchase a new residential house. So this is section 54B. This is section 54 EC. And you transfer other than residential house and purchased a new residential house. So 54F will also apply. So first of all, you will give exemption to this because this is specific. Then this general. 54F will be provided always at the end. Always at the end. If any specific exemption can be availed, then always apply them, and 54F will come always at the end. Generally, this kind of question does not frame, but if it is framed, then always remember first specific exemption, then general. And if 54F is also there, and there is some other exemption also applicable, then 54F will be provided always at the end because that is a proportionate exemption. So always apply the full exemption concept before the section 54F. This is the end of our exemption provision. Moving on to our normal tax calculation provision. So basic rates you have been, I guess, gone through in basic concept chapter. You know the ranking system. Sorry, not the ranking. The slab rate concept you have already known. In case of individual, HUF, company tax rate, partnership firm tax rate, then section 15 BAC tax rate, and the default tax regime and the optional tax regime case law. In the same way, we have a specific rate. Those rates are normal. Those are applicable as usual, but under capital gain, we have a specific rate for a specific kind of capital gain provision. What are those rates? Let's discuss. Very simple topic. It will not take more than 10 or 15 minutes. Then we will go for a break. And when we will come from the break, there will be a short story. And after that, we will move on to our MCQs and those test your knowledge questions. Okay. Then I will have the last session on 26th of December. That is regarding income from other source. So computation of tax on short-term capital gain on equity shares or units of equity-oriented fund under section 111A. All these kind of gain we have discussed in part 1. Section 111A. Section 111A talks about, like there's two specific section was there. If you have equity shares, on which STT has been paid at the time of purchase, at the time of transfer. And if you have equity oriented fund on which STT paid at the time of transfer. Clear? So if these are long-term equity shares, then section 112A apply. And if these are short-term, then 111A apply. If this is section 111A apply, sorry, then tax rate is 15%. And if 112A applicable, then the tax rate will be 10%. So this long term which falls under section 112A, that is chargeable to tax at 10%. And this is chargeable to tax 111A. Clear? If there's a long-term capital gain other than this, that is going to be chargeable at the rate of 20%, like long-term capital gain on building, land, jewelry, etc. Any long-term capital gain except section 112A will be chargeable to tax at the rate 20%. And any short-term capital gain except 111A, except that is going to be taxable as per slab rate, person-wise. So we have two kinds of long term and two kinds of short term. One short term is 111A. It has separate provision of taxability 15%. Other short term will fall as per slab rate person wise. The long term will be at the rate of 10%. No indexation benefit. There will. So these are the cases. Clear? Except this. Is there any connection problem? Let's see. I guess there was a glitch. No, it's fine. Okay. So we have one more long-term capital gain in which we have option to apply tax rate, whether it's 10% or 20%. So with all that provision, we are going to discuss one by one. After this discussion, I will take the query also. So first read the provision, then there's a diagram which will help you to understand the provision more clearly. So this is section 111A. In such case, if following condition is fulfilled, STT has been paid, then the 111A fall as per 15% tax rate. No reduction section 80C to 80U will allow from above short-term capital gain. Reduction section 80C to 80U cannot be claimed out of short-term capital gain under section 111A. Adjustment of unexhausted basic exemption limit. The basic exemption limit is 2,50,000 or 3 lakh in case of 15 BAC. So you can use that unexhausted basic exemption limit, if any, out of this 111A. Deductions cannot be claimed. So exemption of basic limit is allowed, but deductions cannot be claimed. Just be patient. Just stay with me. I'll make a diagram, very simple diagram, to understand you all provisions of this. Just relax. Other short-term cap gain will be chargeable as person-wise slab rate. Now, long-term capital gain, having different kind of long-term capital gain, generally is going to be taxed at 20%. But if it is per 112A, then it's going to be taxable as 10% without indexation benefit and having 1 lakh rupees exemptions also. One more capital gain also applicable, which is on long-term listed securities, etc. We have optional to tax them at the rate of 10% or 20%. Let's see. Concessional rate of tax, where the total income of an assessee includes long-term capital gain, tax is payable by the assessee is 20%. This is normal long-term capital gain. Residential individual HUF income tax payable at normal rate, that is 20%. And we can use the exemption limit. Now the specific rate for long-term lower tax rate 10% also provided. Lower rate of tax for transfer of listed security and zero coupon bonds, where the tax payable in respect of any income arising from the transfer of a listed security or a zero coupon bond being a long-term capital asset. So generally it's going to be taxed at the rate of 20% as a normal rate because it is not 112A. It's a special rate of category. But in this case, you have an option also to tax them 10% without the benefit of indexation. So it is saying that if you have listed shares and zero coupon bonds, then either you have to pay tax if they are long term, option 1, option 2. Either you will take the benefit of indexation on its cost and tax at the rate of 20% as per normal long-term capital gain. This is the optional that do not apply the indexation and we will charge tax at the rate of only 10%. So either you can apply indexation and pay tax at the rate of 20%. And if you want, then you do not apply indexation and pay tax at the rate of 10%. So in that case, we have to apply tax as per both provision and need to find which is having the lower tax liability going to be opted. This is the diagram for this. Consequently, long-term capital gain on transfer of units and unlisted security are not eligible for concessional rate. Only eligible is uh, listed security and zero coupon bonds. So for the purpose of listed security and zero coupon bond, you have these options. Option one, take the sale consideration as per normal provision. These are normal because they are long term. So we are taking the sale consideration, applying index cost of acquisition, index cost of improvement. Then we will have a long term and you will rate that long term at the rate 20%. This is you can apply. This is normal provision. But government gives you option two that for this you can apply tax this by this method also. You will take the sale consideration, take the cost without indexation, takes the improvement without indexation. And we will give you the benefit of lower rate of tax that will be 10%. So whatever is lower, you can claim it as the tax. So in case of listed securities, listed security and zero coupon bond, you have this benefit for claiming the exemption like this. Suppose the long-term capital gain with indexation comes 2 lakh rupees. So either you need to pay the tax at 20%, that means 40,000. Term capital gain is 1,20,000. So either pay tax at the rate of 10%, that is 12,000. So whichever is lower, that is 12,000. So technically, we have long-term capital gain, three category. 1112A, that is 10%, having specific provision. Other long-term, having two kinds of listed security have option into action to no index and tax rate 10, whichever is lower. For other, it's always 20%. So it's like this. Internet connection problem is there. Okay. Manish ji, is there any internet problem? इस साइड से हो रहा है मैं नेट कनेक्शन चेंज कर दूं पूरा या फिर अभी चलो ब्रेक खत्म करने वाले हैं उसके बाद में वाईफाई चेंज दूंगा ना ओके मुझे आप ठीक है बस मैं करता हूँ एक मिनट में सो डिडक्शन वी कैन नॉट क्लेम adjustment of unexhausted basic exemption money in tax per person wise. Long term tax rate will be 20%. Basic exemption can claim unexhausted if you have Okay, welcome back everyone. Just came to you कि नेटवर्क बीच में ग्लिच कुछ हो रहा था और आई गेस कोई टॉपिक आपका रह गया. मुझे प्लीज कोई ये बता दो कहाँ से हमें प्रॉब्लम स्टार्ट हुई है. मैं उसे दोबारा एक्सप्लेन कर दूंगा. काइंडली सेंड मी समवन फ्रॉम वेयर वी आर नॉट एबल टू हियर द वॉइस प्रॉपरली और द वीडियो. सो लास्ट हमने जो डिस्कस किया उसके बाद कहाँ से प्रॉब्लम अराइज हुआ, जस्ट टेल मी दैट. So both from the okay. Sir, LTCG, one more voice is not coming from the part of deduction under chapter 6A. Okay, so let me explain that again. Do not worry. I am here. I will help you. So we were discussing this provision. Let me take this provision once again. So from starting, we are discussing it. Okay, so there will be no problem. And it says that what is the capital gain taxability provision. So first, that was short-term capital gain under section 111A. So if the short-term capital gain relates to section 111A, which talks about if you have long-term equity shares on which tax has been paid, STT, at the time of purchase and sale as well. First of all, second, it says that if it is a equity-oriented fund on which tax has been paid, STT, at a time of transfer. So if they are long term, that is going to be taxed as per section 112A. If these are short term, then they are going to be taxable as per section 111A, what we are discussing over here. So if these are these short term equity shares, they are going to be taxed at the rate of 15%. You can claim the basic exemption limit of 2,50,000 or 3 lakh as the case may be. But you cannot claim the deduction. Deduction section 80C till 80U is not applicable on any kind of capital gain, whether it's section 111A, 112A. If it is long-term capital gain, other or short-term, we cannot claim the deduction. We have the diagram for it, do not worry. Then other short-term capital gain will be fall as per normal slab rate. Clear? Next, the long-term capital gain under section 112. So long-term capital gain having different kind of character. These are, so long-term capital gain. If I'll take the sheet. So for the purpose of capital gain, let's discuss the provision in detail. Either we will have short-term capital gain or we will have long-term capital gain. Clear? We have short-term capital gain of two kinds. One is under section 111A. 111A is applicable on equity shares. Those are long-term on which STT has been paid plus equity-oriented fund. So if you have this kind of short-term capital gain, that is going to be taxable under section 111A at the rate of 15%. Clear? No deduction under section 80C-80U can claim. First specific condition. Second, it says basic exemption limit can be claimed. That 2,50,000 or 3 lakh in case of 115 BAC, you can claim it. Okay. Third case, rebate can also claim. That 12,500 rebate under section 87A or 25,000 rebate up to 7 lakh rupees under section 115 BAC. So these are special provision for short-term capital gain. That taxability rate is 15%. No deduction, basic exemption can be claimed, rebate can be claimed. Clear? If it is other short-term capital gain, except these, any other short-term capital gain, this is going to be taxed as per person-wise rate, slab rate, what we call it slab rate, like 5%, 10% sort of. Clear? In this case, deduction can be claimed, basic exemption can be claimed, and rebate can claim. So it will be going to be taxed as per slab rate, 5%, 20%, 30%, etc. or 5, 10, 15, 20, depends. If we have long-term capital gain, either we will have long-term capital gain under section 112A. 112A is the opposite of this. So if these securities are short-term, that will fall under 111A. If these are long-term, they will fall under section 112A. So if your security fall under 112A, that is going to be taxable at the rate of 10%. No deduction. Basic exemption can claim, but rebate cannot be claimed. No rebate under section 87A. If you have other long-term capital gain, if these are listed security and if zero coupon bonds, then they are going to be taxable as per this option. You have two options, option 1 and option 2. You can take the benefit of indexation, clear? Or you can calculate the capital gain on listed security or zero coupon bond without taking the benefit of indexation. If you are taking the benefit of indexation of cost, then whatever will be the long-term capital gain, that is going to be taxed at 20%. And if you are not taking the benefit of indexation on cost, then you can tax it at the rate of 10%. So we have to calculate it twice, and whichever is lower will be the tax on these listed security and zero coupon bonds. All other long-term capital gain is going to be taxable at the rate of 20%. Deduction cannot claim. Basic exemption, yes, we can claim. Rebate, yes, we can claim. Basic exemption will be available only in case of resident. So we have a diagram also regarding this, but this is the basic concept of capital gain taxability. Clear? So these are the provision written over regarding the long-term capital gain. It's going to be taxable at the rate of 20% or 10% if it is 112A, or 10 or 20, whichever is lower. This is the indexation format for listed security or zero coupon bonds. Either you apply option number 1, that is long-term capital gain tax at 20% if you are taking the benefit of indexation. Then tax will be 20%. If you're not taking the benefit of indexation, then tax will be 10%. No deduction can be claimed. Exemption is allowed, basic exemption to only resident individual. So these are the detailed provision. I have also made some separate summary of this capital gain taxability procedure. That will really help you. For HUF, not for resident, AOP, BOI, AJP also. So only the capital gain exemption, basic exemption for capital gain can be claimed by resident individual or HUF only. Not even resident, AOP, BOI, AJP can claim. Even if resident, then cannot claim basic exemption of 2,50,000 out of the capital gain, which is taxable under section 112 at the rate of 20%. No deduction is allowed. No benefit of rebate for 112A. This is rebate benefit is available to all kind of tax except Section 112A. 112A capital gain cannot claim the rebate. So I have made the short note regarding it. Computation of tax on total income. Read carefully, only for individual and HUF, those are resident. So if any resident having short-term capital gain except 111A, except 111A, it is not 111A, except 111A, that is treated or taxed as per the person slab rate wise, normal slab rate wise. Clear? If you having a long-term capital gain that is taxable at 20% under section 112, then the basic exemption can claim unexhausted limit. If it is a short-term 111A, that is going to be taxable at the rate of 15%, basic exemption can claim the unexhausted limit. जो लिमिट बची है 2.5 लाख या 3 लाख में से, उसका पार्ट आप यूज कर सकते हैं. If it is a long-term capital gain under section 112A, at the rate 10%, basic exemption 2.5, 3 or 5 available only to resident individual and HUF. Only resident individual HUF can claim this 112A basic exemption. But rebate of 12,500 or 25,000 is not available. Even no indexation benefit. For non-resident individual and HUF and resident, non-resident AOP, BOY, AJP, no rebate to any non-resident. Non-resident cannot claim the rebate. Short-term capital gain, except 111A, same provision going to be taxed as per normal rate. Short-term 111A at the rate of 15%, but now non-resident cannot claim the unexhausted limit from short-term capital gain, from long-term capital gain, or under section 112A long-term capital gain. No basic exemption can be claimed if you are a non-resident. The basic exemption can be claimed by a non-resident only the income which is except 111A, 112A or 112 long-term. So these were the provision. Let me share the diagram for it. I've already uploaded the chart regarding it. Let me explain you that chart. So now this whole concept will be crystal clear after this chart. So if you are a resident, so whenever there is a calculation of tax required, always follow this method, what I am trying to teach you. There is always gross total income. Gross total income means income of 5 heads. You have to divide that gross total income as per this rule. If you are a resident, then always make 5 part of it. If there is any casual incomes are like winning from lottery, etc. That is going to be discussed in detail in income from other source. So casual income is taxable 30% fixed. Whenever I write fixed means those cannot claim the basic exemption. So wherever I am going to write this fixed, that means those income which cannot claim basic exemption benefit of 2,50,000, 5 lakh, etc. So casual income cannot get the benefit of basic exemption. That's why it's always taxable at the rate of 30%. Out of this GTI, we are just doing what? We are just making part of that GTI for the purpose of calculation of tax. So whatever your casual income in this GTI, which will be included income from other source part, casual, other. So the casual income part will be separated for the purpose of taxability. Then long-term capital gain under section 112A. That is going to be taxable at the rate of 10%. I have already uploaded the chart of this. I'm just trying to explain it over here. So you will be really easy to solve the question by applying this method. What we are going to apply in test your knowledge question. 10% taxability on 112A having no rebate benefit. But I am not writing F, that means basic exemption can be claimed. Then STCG under section 111A going to be taxed at per 15%. I'm not writing F, that means it can also claim the basic exemption. Then other long-term capital gain under section 112. That is going to be taxed at the rate of 20%. Not writing F, that means they can also get the benefit of basic exemption and all other income will fall over here. Out of the GTI, you have to separate casual income, long-term 112A, short-term 111A, other long-term. Balance will be other income. It is not income from other source balance. It's a other balance out of GTI. That means it will include your PGBP income, your income from house property, your salary income, if any, your other than 111A short-term capital gain, because 111A short-term capital gain is over here. So other short-term capital gain on jewelry, building, land, etc. will be covered in balance, and other income from our source. Other income from other source except casual, because casual has been separated. So technically this balance will be the aggregate of all this. This is my income and this is going to be taxed as per slab rate. One more important thing, deductions under section 80C to 80U can only be deducted from this part. So when I told you that deduction cannot be claimed here, deduction cannot be claimed here, deduction cannot be claimed here, deduction cannot be claimed here. Why? Because deduction is only allowed to be claimed out of this balance income. So automatically, if you are able to understand this much only chart, this chart only, you now know all the provision. That basic exemption can be claimed, yes, 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 not allowed. Rebate cannot allowed from this income. Deduction can be allowed only in this, so deduction cannot be claimed out of these income. Clear? The basic exemption, I have made this diagram in this way because basic exemption will be first allowed from this income. If any unexhausted limit there, then you have to apply secondly from this. Its number is third. This number is 4. This is fixed, so cannot claim the basic exemption. So order to provide the basic exemption will remain this. First of all, basic exemption will be write off from other, then other long term, then 111A short term, and then long term under section 112A. This you have to follow. If you are a non-resident, this was the provision for resident. And out of this resident, for the purpose of long term, short term, and this can be only basic exemption can be only claimed by individual and HUF. AOP, BOI, etc. Even if they are resident, they cannot claim basic exemption from long term or short term. Now, if you are a non-resident, no rebate in any case, first of all. Now we will divide the income again, casual. Long-term capital gain 112A, 10%. Then short-term capital gain 111A, 15%. Then long-term capital gain 112, 20%. And the others. Same case, deduction can be claimed 80C, 80U from others. This will remain same. And basic exemption can claim. Now these are all fixed, 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 and fixed. So a non-resident can only claim the basic exemption of 2,50,000 or 3 lakh or 5 lakh out of other income. Resident can claim from long-term, etc. also if it is a resident individual HUF. But other than individual HUF, if you are a non-resident, then you cannot claim basic exemption from any of those income. These are going to be taxable completely. So this chart has also been made by me. I have uploaded the chart diagram. You will be able to see it, might be after 2 or 3 or 4 hours on the portal. Download it and please follow the diagrams and follow the chart. That will really going to help you to learn the provision very easily. So that was the provision. Now we can move on to question, etc. One tax calculation question in this. this illustration. I will take the queries, don't worry. So calculate the income tax liability for the assessment year 2024-25 for this question. It said, suppose Mr. A, age 45, total income is 2,40,000. Total income other than long-term capital gain is 2,40,000. And long-term capital gain is 85,000 from sale of vacant land, sale of vacant site. So you have to calculate the tax as per section 15 BAC and the other part also. This is the question. Clear? Now we have to solve it. So if I'll going to solve it over here, we do not have the proper place. So let me solve it on a separate sheet. So the question A was saying, question 1, it was say Mr. A, age 45 year, and he's a resident. Clear? His total income other than long-term capital gain has been given 2,40,000. Long-term capital gain on vacant plot. That means not regarding the shares, etc. It's the other long-term capital gain, 85,000. Now they ask you to calculate tax as per normal regime and as per 115 BAC. So for the purpose of normal regime, let's solve this. Default tax regime. First of all, we are going to solve it as per default tax regime. I told you always make 5 part. So you can see this 2,40,000 falls over here. And this long term is the 20% part, which will fall over here, 85,000. Now we have the exemption of 3 lakh rupees under default tax regime. You must have read the provision in chapter 1. 3 lakh rupees is the basic exemption. He is a resident. So we will allow him to claim this 240 from here. So this will be nil because first order to give the basic exemption to this. Now the second will eligible for the exemption. Remaining 60,000 can be claimed out of this income for 3 lakh basic limit. Now we have 25,000 taxable income. That is going to be taxed at the rate of 20%. That will come. Just a second. The rate will be 20% specifically. There is no slab rate will be applicable on it. So that will be 5,000 rupees. And we have the rebate for 15 BAC, that is up to 7 lakh rupees. If the total income is up to 7 lakh, which is below 7 lakh, then up to 25,000, we can claim the rebate. So that rebate 5,000 can be claimed over here and tax liability will be nil. If we are solving it as per default tax regime. Case B. Now it says age is 62 years and Mr. B is a non-resident. The income has been given 3,10,000 and 10,000 income has been given on shares. That is under section 112A on which STT has been paid. Now again, this is a non-resident case, so there will be no rebate and exemption cannot be utilized against long-term capital gain. So the income has been given 3,10,000 and 10,000 to your share income on 112A. So out of this 3,10,000, 3 lakh has been claimed as exemption. Remaining 10,000 is going to be taxable at 5%. That will come 500 rupees. But rebate cannot be applicable. So this 500 will be the tax. On this 10,000, there is an exemption of 1 lakh rupees under section 112A, up to 1 lakh rupees capital gain is exempted. So this 10,000 exempted, there will be no income under 112A. This 500 rupees will be your tax and 4% cess you will charge. So that will be 520 your tax liability in case number B. Now for C, the income has been given. The income has been given in case of Mr. C, who is age 81 year and resident. So he is 5,90,000. This income has been given 5,90,000 and 60,000 from sale of agricultural land in rural area. 60,000 is from agricultural land in rural area. So that is exempted. That is not a capital asset. So only income remains 5,90,000 rupees. Out of this 5,90,000, 3 lakh will be exempted under section 15 BAC. Even it's 81 year. So in normal case, the exemption will be 5 lakh, but in 115 BAC, it's remain 3 lakh. So there will be 2,90,000 remaining income going to be taxed at 5%, 14,500. But now there will be rebate because he's a resident and 25,000 rupees rebate maximum can be claimed. But now our tax liability is only 14,500. So tax will remain nil. Now the D case, in which income has been given, again he is a non-resident, 82 year age, only one income has been given, that is 4,80,000. So in this case, 3 lakh will be your exemption. Now you cannot claim the rebate. 1,80,000, 5% tax liability. That means 9,000 tax plus 4% cess, that is 360. So tax will be 9,360. If we solve these questions under optional tax regime. So in the first case, the income was 2,40,000 and this income was 85,000 long term. We have exemption of 2,50,000 only. So 240 has been used. Balance 10,000 can be claimed out of this income. We have 75,000 remaining. Tax rate 20%. That will come 15,000. Now rebate is maximum 12,500. So 2,500 rupees will be your tax plus 4% cess. That will 2,600. The second case, if we will solve, then again, it's a non-resident. So rebate cannot be claimed. 3,10,000 income. 10,000 is your 112A long-term capital gain. Out of this 250 exempt, balance 60,000 is your income. This is going to be exempt up to 1 lakh rupees exemption. 5% tax, 3,000. Cannot claim the rebate. 4% is your cess. That will be 3,120. Other case C and D, you can also solve yourself. I just want to go to the test your knowledge question. So that was the question. We have the solution. You can read it. You can see it. Now moving on to our test your knowledge. Before that, I am going to take the queries, whatever has been asked by you. Test your knowledge, question number 1. Let me take the queries. I know there was some problem. So if any query I skipped, kindly send me again because at that time there was a network issue. Sankaran, okay. Mr. Devinder Singh, profit on purchase, sale of shares come under income from business. Which income related to shares treated under capital gain? Mr. Devinder, I believe that you did not watch the lectures correctly. I've explained this also in last class and I guess in last one or more classes also. If shares sale and purchase is your frequent transaction, that will be your business income. But if it's not frequent, you did it occasionally, then it will remain your capital gain procedure. So it will depend upon frequency of transaction. Next is Sankaran. Really, ranking working in section 54F is like watching movie with story inside another story again, which is inside a story of main picture. Yes, like Inception movie, na? Movie again, story, dream, in the dream and the dream. Okay. So next is Shivanana. Sir, what if there is a loss in any asset like shares, whether it can be adjusted with other asset gain? Yes, the long-term capital loss or short-term capital loss can be adjusted against each other, etc. But there is separate specific provision in set of chapter. In detail, that is going to be discussed. For the time being, short-term capital losses can be adjusted from short-term gain and long-term gain. But long-term capital loss can only be adjusted against long-term capital loss can only be adjusted against long-term capital gain. Next is Ruturaj, sir, but if we give first exemption to general provision, we will have balance of a specific provision amount in CGAS. Then we will be able to use it in next previous year for exemption. No, it depends. It depends. We have to find out the calculation for the benefit of assessee. By the way, the tax liability can be minimized. And as per general rule, if you give the specific benefit to the specific exemption, that will give you the more benefit. But if there is any other case due to which we can minimize the tax, we can opt it. But that is maximum happen in practical life, not for your examination purpose, because in that situation, it will be really complicated to find out which will give you the minimum tax liability. Next is Manohar Yadav, Sirji, what if section 54F, if I purchase residential house for 6 crore and my net consideration, suppose 4 crore, then we can take 6/4 as proportion. If your capital gain is, it will depend upon the formula. The formula saying original capital gain. Whatever your original capital gain, you have to divide it by your net sale consideration. Your net sale consideration is 4, then how can you invest more than that? If your net consideration is 4 crore, you cannot invest more than 4 crore for purchase of a new investment. That will not the consideration of that property that you will invest from your side. So we can take maximum that has been recovered from the consideration of property sold by us. Mohammad Suhail, once in Hindi. Mr. Mohammad Suhail, what provision you want to listen in Hindi? Kindly tell me. Okay, that problem was there, yes. I guess I have repeat all the provisions. So whatever was the problem with the net that might have been solved. Next is Nancy Saxena is asking, sir, किसी क्वेश्चन में रिबेट 25,000 298,000 दी है, वो कब होती है? 115 बीएसी का जो प्रोविजन है उसमें रिबेट आपकी 25,000 रुपए तक मिल जाती है अप टू 7 लाख रुपीज ऑफ टोटल इनकम. क्लियर? और जब 115 बीएसी नहीं होता है तो हमारे पास रिबेट है मैक्सिमम 12,500 इफ योर टोटल इनकम इज अप टू रुपीज 5 लाख. You should go and read chapter number 1, basic concept, in which the slab rate concept has been explained in detail. Okay. Next is Ruturaj. Before ending the session, please tell the story. This will be your second last story. Your words will really motivate us. Okay, do not worry. I have a very short story. I will tell you before end of the class. Sir, C case में agriculture income not added. Vaishali, agriculture income is exempt from tax. That's why we did not add it, because it will not form part of your GTI. So once something will be distributed for the purpose of taxability, if it is the part of your GTI. So if something is not part of your GTI, like agricultural income, etc., that will not going to be shown in our diagram for taxability purpose. Okay, you have to remove it. You cannot claim it. Sir, in case 2 for optional tax regime, basic exemption 3 lakh rupees, Miss Monica, that will be 3 lakh if it is a resident. In the second case, he's a non-resident. So if you are a non-resident, whether your age is 82, 92 to 102, the limit will remain 2,50,000 rupees. Okay. Basic may, of course, yes, that was non-resident case. Clear? Sarji, please explain STCG. I have explained everything, Devraj ji. We are moving on to our test your knowledge question. I hope you all are ready. So Mr. Mithun purchased 100 equity shares of Messrs. Good Money Company Limited on 1st April 2007 at the rate of 1,000 per share in public issue of the company by paying STT. Company allotted bonus shares in the ratio of 1:1 on 1st December 2022. He has also received dividend of 10 rupees per share on 1st May 2023. Okay. He sold all shares on 1st October 23. So selling date is this. He purchased original shares on April 2007. So this will be long-term capital asset. It's more than 12 months. And bonus shares has been allotted on December 22 and he transferred it on 1st October. That is less than 12 months. So these will be short-term capital asset. Clear? 4,000 per share through a recognized stock exchange and paid brokerage of 1% and STT is 0.02%. You have to find the tax liability on 24-25 under default tax regime, assuming that he is having income other than above, no income other than this. You have to calculate the FMV on 31st January 2018 has been given 2,000 rupees per share. Correct. So let's solve this question. We have to solve it with default tax regime. Whenever you have a question regarding shares or bonus shares, try to solve it in horizontal mode, not vertical mode. It will really save your time. So we have normal shares, that is 100 normal shares, and we have bonus shares, 100 bonus shares. Period of holding, we have to find it out that it is long term and this is short term. Clear? Now the sale consideration has been given 4,000 rupees for each share. So the sale consideration for normal share will be 4 lakh rupees less index cost of acquisition. But these shares have been purchased before 1st February 2018. So we have to apply the special provision to find out the cost of acquisition. A special provision. Because STT has been paid at the time of purchase and at the time of sale. Now the special provision says you have to find the cost of acquisition. First of all, take the actual purchase price. So he paid actual purchase price 1 lakh rupees, 100 rupees per share at the time of purchase. Now we have to compare it with the lower of sale consideration, which is 4 lakh. Or FMV of 31st January 18, which has been given 2,000 per share. So that will be 2 lakh. Whichever is lower, lower is 2 lakh. This need to be compared with the actual purchase price and whichever is higher will be your cost. That is the special provision for cost of acquisition. On the last page of assignment number 1, we have discussed. So that will come 2 lakh rupees. Indexation will not apply because this is section 112A provision on which indexation does not apply. So we have long-term capital gain of 2 lakh rupees. Sorry, less there is a brokerage also given, that is 1% of sale consideration, that is 4,000. So my capital gain will be 1,96,000. Clear? Now these are short term. Again, sale consideration same, 4 lakh has been given 4,000 rupees commission has been given. That will be 3,96,000. Now these bonus shares have been purchased after 1st February 2018. So if it has been purchased after 1st February 2018, in that scenario, the special provision will not apply. Normal cost of acquisition, we have to find it out. Now, for the purpose of bonus share, the normal provision says, because special provision is not applicable. Normal provision says if bonus shares has been purchased before 1st April 2001, then the cost of acquisition will be FMV on 1401. You should refer the chart of cost of acquisition. If it is purchased on or after 1/4/2001, and of course not before 1st February 2018, then cost of acquisition will be nil. So in that case, cost of acquisition will remain nil. And it is not a section normal provision will be applicable. So that will be my section 111A, short-term capital gain. Clear? So now we need to calculate the income. Dividend also received for 2,000 rupees. Now for the purpose of calculation, I have to divide my GTI into 5 parts. So we have other income, dividend, that is income from other source, 2,000. We have only this income, others. Then we have short-term capital gain, 111A, that is 3,96,000. Then we have 112A, that is 1,96,000. So because we have to apply the default tax limit, I have exemption of 3 lakh rupees. So out of this 3 lakh, 2,000 has been utilized for the purpose of dividend. So dividend income will be nil. Remaining now 2,98,000 we can use against this income. So this 298 has been reduced. Okay, this was asked by, I guess, Nancy Saxena. Okay, so remaining capital gain will be 98,000. That is going to be taxable at 15% rate. It will be 14,700. Now, 112 having separate 1 lakh rupees exemption. So this 1 lakh can be claimed as exemption. Remaining capital gain is 96,000. On which 10% is your tax rebate, 9,600. Your tax is 9,600. No rebate can be claimed out of this. So rebate can be maximum 25,000. But because this is long-term capital gain 112A, you cannot claim the rebate of 25. So rebate will remain 14,700. Out of this short-term, there will be no tax on this. This 96,000 plus 4% cess will be your tax liability. This was question number 1. You might be feeling that this is so complicated, you are not getting it properly, just because you might not remember chapter number 1. That talks about the rate of taxability, the surcharge provision, the cess provision, the rebate provision. So before solving test your knowledge question after the class, do not revise it right now. Please go and revise the rate of taxes as has been specified in chapter 1. Only after revising the rate, now revise the provision what we discussed today. That diagram of taxability of tax, 15%, 10%, etc. Once you have revised the basic chapter rates provision and the capital gain taxability provision, what we discussed today, only then try to solve again, test your knowledge question or the example we have done. Only after that. Do not try it just like the way what we are discussing right now, because you have not cleared with the concept of taxability. If somebody is asking, sir, how the rebate came in the question, somebody is asking, sir, why rebate is 25,000. So that is why, because you have not properly actually remember the provisions which has been discussed in chapter number 1. Question number 2. The question number 2 is regarding the conversion of capital asset into the stock in trade. Now see how simple this is, because we need not to calculate tax. So now you will feel this question is very easy because this provision we have discussed. RF convert his plot of land purchased in July 2004 for 80,000 into stock and trade on 31st March 23. So this is my transfer date. The FMV on 31st was 3 lakh. This is my sale consideration. Stock and trade has been sold in 325 in the month of January 24. So this is my year of taxability. January 24 means assessment year 24-25. First we calculate PGBP income because stock has been sold 325. Whatever your market value at the time of conversion will be the purchase price for the purpose of PGBP. So PGBP income will be 25,000. Solved. Now capital gain year will be assessment year 24-25, but period of holding will be from 2004 till 23, long term. Sale consideration will be your FMV, that is 3 lakh. Now less index cost of acquisition. The property has been purchased for 80,000 and indexed will be taken 331. Why 331? Because 20 to 23 is the conversion year. So that will take as a transfer year. And 113 is the purchase year index. So that will be 2, 3, 4, 3, 3, 6. Balance will be your answer 6, 5, 6, 6, 4. So you might feel this is easy. Nothing is easy. And you might be feeling question 1 was difficult. Nothing is difficult. Because we just discussed today the provisions of tax calculation, and even that you are not remember the provisions of chapter 1. So you do not revise the provision yet. That's why you might be feeling question 1 is difficult. These provision we have revised, we have done the question regarding it in MCQ also. So you might be feeling this is easy. So it just the provision, if you have remembered properly, if you know those provision properly, you will feel the solution easy. And if it is not so, you might feel it difficult. Question number 3. Mr. Suman, sir, in first case, can we not reduce 1 lakh? We reduced 1 lakh after calculating GTI at the time of calculation of tax. So we reduced it. You must have seen now, Mrs. Suman, that we reduced it later on at the time of calculation of tax. Now, third is a very good question. It's a very, very important question also. Please focus, listen it carefully. Mrs. Harshita purchased a land at a cost of 35 lakh in financial year 4-5 and held same as her capital asset till March 2023. She started a real estate business on 21st March 23 and converted the said land into stock in trade of her business on the said date. Again, it's a conversion of capital asset into stock in trade, where the market value of the land is 210 lakh. So that is my sale consideration, of course. Why this question is important? You will see. This is my FMV, which is going to be my sale consideration for the purpose of capital gain, and this is going to be my cost for the purpose of my PGBP. This is my transfer year 22-23 for the purpose of index. Now the beautiful part of this question is this, that she constructed 15 flat of equal size, quality and dimension out of that land. Cost of construction of each flat is 10 lakh. Construction complete in February 24. She sold 10 flat out of these 15. So now we have to calculate the PGBP income of 10 flats only and capital gain income also for only 10 flats. 30 lakh rupees per flat in March 24. The remaining 5 flats held as stock in trade on 31st March 24. It's not end yet. There is more to come. Now there is investment also. She invested 50 lakh in bonds issued by National Highway Authority of India on 31st March 24. So 54 EC and 50 lakh in the bonds of Rural Electrification Corporation Limited in April 2024. Again 54 EC. Total investment is 1 crore, but we can give the benefit of only 50 lakh under section 54 EC. So now you need to calculate the business income and the capital income of Harshita. So question number 3. First of all, calculate the PGBP income for assessment year 24-25. So for the purpose of PGBP income, we have sold 10 flats only. So we need to calculate the PGP income of this at 30 lakh rupees each. So 300 will be my sale consideration. Now we talk about the cost. 210 lakh was the FMV that will become the cost. Then this is FMV of 15 flats. So we have to take the 10 flats because we have sold only 10 flats. That become 140. Then we have done construction after the conversion. On each flat, we expend 10 lakh rupees for the purpose of construction. So 100 lakh has been expended on 10 flats. So my business income will come 60 lakh rupees. It's this simple. Now you can see the question is huge. The solution is so simple. Now we will solve the capital gain provision assessment year post 24-25. Period of holding will be up to 2023 at the date of conversion. So now the sale consideration, whatever is your purchase, that will become automatically your sale consideration. That will be 140 lakh. Now I have to deduct 35 lakh was the cost of land of 15. For 10, it was 23.33 multiplied by 331 upon 113. So this will be my cost, index cost of acquisition. 71 lakh, 65 lakh will be my long-term capital gain. Under section 54 EC, the maximum exemption can be claimed is 50 lakh. So that will be my answer. I told you in capital gain, the question will be huge. Almost single full page question will be there. And solution will be like 4 or 5 lines if you know how to solve it. So if this is simple question. In the examination, this might come for 5 marks or might be 6 or 7 or 8 marks. And you can see if you know the provision, then you can solve it so easily. Like PGBP part is just like nothing. It can be solved in a minute. And this will take only 2 or 3 or 4 or 5 minutes to solve this question. Because if you know what information we need to use for the purpose of solution, that will be really easy for you to solve these kind of questions. That was question number 3. Now question number 4 talks about Mr. A's individual carrying on business. His stock and machinery were damaged and destroyed in a fire accident. The value of stock lost is 6,50,000. Stock. So the stock loss, etc. will go in PGBP. Certain portion of the machinery, he was only having one machinery, could be salvaged. The opening balance of the block as on 1st April 23 after providing depreciation is 10,80,000. During the process of safeguarding machinery and in the firefighting operation, Mr. A lost his gold chain and a diamond ring, which he had purchased in April 2005 for 1,20,000. The market value of these two items as on the date of fire accident was 1,80,000. He got following as compensation for loss of stock. For loss of stock, whatever compensation he will get, that is going to be shown in the PGBP head. I can show you like this. This 480 is a receipt for, so receipt part will go in the credit side. The loss value, this is 650, that can be shown in the PGBP loss side. So this is the treatment of PGBP. We have to solve the treatment for the purpose of capital gain. So for the purpose of capital gain, we have to calculate because there is only one asset. So technically one asset has been destroyed. So whole block of asset has been lost, or we can say sold or destroyed. So if whole block of asset has been sold, in that case, sale consideration has been given in question 6 lakh, the compensation we receive, less the WDV we need to deduct. So there will be a short-term capital loss, 4,80,000 for this. And for the purpose of Jewelry, the sale consideration for chain and jewelry will be 1,80,000. The cost has been given 1,20,000. We have to do the indexation 348, and because it has been purchased in April 5, so the 5-6 index we need to use to find out the exact index cost of acquisition. Then we will have our loss or profit on this sale of in this loss of machinery, diamond ring and gold chain. That is question number 4. Now question number 5. Question number 5, 6, 7 all are almost same. But 5, 6, 7, you have to understand one thing. In this 5, we are talking about section 50C, the sale consideration for immobile properties, land and building. And in that section 50C, which is exactly same as per section 43CA, in which we know how to calculate or to find out the sale consideration for immobile property. So it says for the purpose of section 50C, the actual consideration or stamp duty value, whichever higher will be your sale consideration for the purpose of capital gain if your stamp duty value is more than 110% of your consideration declared. And the stamp duty value will be taken at the time of registry, the time of transfer, or if agreement has been made before the date of transfer in which any amount has been paid via check, then that day stamp duty value will be taken for the purpose of calculation. These provision we have discussed under section 50C. Again, those students who did not revise section 50C or 43CA, that might feel this solution is difficult. And if any of you still remember the provision of section 43CA in PGBP or section 50C under capital gain, those will feel how easy these questions are. How easy. These are questions which already has been asked in the examination. We are solving those questions which has been asked in the examination. Similar kind of question has been asked. So you can see Mr. Sarthak entered into an agreement to sell his property at Kanpur, that is 1 crore and 50 lakh rupees. Clear? Now 16th August, value 1 crore 50 lakh. That is the consideration. Clear? The payment has been done like this. Other detail has been given. So the consideration has been given in the last, the opening of the question was 1 crore 50 lakh. Now handed over the possession on 15/12/23. The registration procedure has been complete on 14 January. He paid the sale proceed as following. The value has been determined on the stamp duty authority like this. So because the agreement has been made on 16th August and the payment has been done by check, so we need to take the stamp duty value on 16th August. This is the value for the purpose of comparison. And this has been exceeding the 110% of consideration. What is the 110% of consideration? That means 10% of this 1 crore 65 lakh. And the stamp duty value is 170. So this is higher than this. So now whichever is higher we need to take. So the sale consideration will be in this case 1 crore 70 lakh. Now the normal provision index cost of acquisition 30 lakh is the cost of acquisition. We have to apply the index provision 348 divided by 100. That will be 1 crore 44,000. The long-term capital gain will be 656,000. Now he purchased two properties for the purpose of exemption under section 54. Because the gain is less than 2 crore. So we can take the benefit of both property. One is for 20 lakh, one is for 35 lakh. So both will be exempted. Remaining gain will be 10 lakh 60,000 approx. So the question number question number 5, question number 6, and question number 7 almost same. They all relates to the sale consideration and stamp duty value provision. Do not worry, try to solve it. We have the solution also given. Following solution, the complete solution with every explanation has been given by the institute. You can read the solution. First of all, try to solve it yourself. If the answer does not match, then please find the mistake. Even if it's not found by you, let me know. I will send the solution also. I have made my solutions also in very short way, so you will be able to understand very easily. I will upload the solution which has been made by me, so that will really going to help you to understand this full provisions. So that was section, that was capital gain detail provision, what we have discussed. I will upload the MCQ also. So you will also have some practice of some questions to solve these kind of questions. Let me see if there is any query. Okay, there is question number 7 in which the forfeiture of shares also included. Forfeiture of advance money forfeited under section 51. In case of advance money forfeited, I have taught you the provision that if any advance money has been forfeited, then it has been your income from other source. It will become your income from other source. But before 1st April 2014, there was a separate provision regarding it. If the advance money has been forfeited before 2014, that is a separate provision that it will not form your part of income from other source, but it will reduce from the cost of the asset when you will transfer it. So if any advance money forfeited before 2014, then we have to reduce it from the cost of the asset sold at the time of sale. After 2014, we have to taxable it in income from other source, and it will not affect our cost of the asset. In illustration number 7, or we can say in the question number 7 of T test your knowledge questions, there is 2 advance money forfeited has been given in the question. Let me show you. This question number 7, assessee has advance money forfeited twice. This is one advance money has been forfeited, 1,11,000 in advance, and it has been forfeited. And again, one advance money forfeited after 2014, 1,51,000. So this is going to be your income from other source in the year advance money forfeited, normal provision. This is as per the old provision. You can also refer to section 51, advance money forfeited. Both provision has been there. So this 1,11,000 is going to be reduced from the cost of acquisition. This is the cost of acquisition at the time of sale. So when you will see the solution, in the solution, this advance money has been shown as income from other source. This has no treatment has been shown in the year of forfeiture. So you can see the solution, the sale consideration will be there at the time of calculation of capital gain, and when they are calculating cost of acquisition of that asset, that is cost of acquisition will be 3,90,000. The cost of acquisition will be, there will be, I guess, land is 10,70,000. This is the other thing. The cost of acquisition will be given 10,70,000, and out of this, advance money forfeited will be 1,11,000. So 9,59,000 need to be indexed. So I'm just explaining you that in this question, you will see the solution. So you might get confused that what is this 1,11,000 is doing from the reduction of cost of acquisition. That is because of the provisions which have been earlier, that if any advance money forfeited before 2015, then it's going to be reduced from the cost of acquisition of that property. So these are the capital gain topic we have discussed, and let's have a short story before ending the session. If there's any query, let me see. Miss Monica, I have explained you this, okay? Mr. Manohar Yadav, in question number 3, there is two investment. One is 50 lakh, that is within 6 months. The second 50 lakh is after 6 months. So that's why we only claim first 50 lakh rupees exemption. Even if the others 50 lakh is before 6 months, that I was explaining, it cannot be claimed as exemption because the maximum limit is already has been exhausted. So you are correct. The second 50 lakh has been the RECL investment, rural electrification, has done after 6 months. That's why we did not include it. But even if it has been given, then always remember the maximum limit is 50 lakh rupees in case of section 54 EC. You are correct. So a very short story. Let's listen it. Very short, like 2 minutes. एक गुरुकुल था, वहाँ बहुत सारे बच्चे पढ़ते थे, बहुत सारे। उस गुरुकुल में, गुरुकुल यू अंडरस्टैंड, पुराने जमाने के जो स्कूल होते थे, तो बहुत सारे बच्चे पढ़ते थे, बट एक बच्चा था जो पढ़ाई में बहुत वीक था, बहुत ही ज्यादा वीक था। तो जो वहाँ के आचार्य थे, ये रियल स्टोरी है, वहाँ के जो गुरु थे, उन्होंने बहुत कोशिश करी उसे समझाने के लिए, पढ़ाने के लिए, लेकिन वो बहुत ही मुश्किल से चीजें समझ पाता था। तो उन्होंने कहा कि इसको पढ़ाने में सारे टीचर्स का बहुत सारा टाइम वेस्ट होता है, तो इसको साफ साफ बता देते। तो उन्होंने उस बच्चे को बुलाया अपने पास और बोला, बेटा देखो, तुम पढ़ नहीं सकते, हम तुम्हें पढ़ा नहीं सकते। तो उसने बोला, क्यों नहीं पढ़ा सकते? अब बच्चा बहुत छोटा था, तो उसे समझाना और ये कहना कि तुम बेवकूफ हो या तुम्हें समझ नहीं आती हैं चीजें, तो उन्हें लगा ये बहुत छोटा है, इसको ऐसी बातें हम नहीं बोल सकते। गुरुकुल है, बहुत बहुत साल पहले की बात। तो उन्होंने कहा इसको दूसरे तरीके से समझाते हैं। उन्होंने कहा कि देखो, जो हाथ होता है हमारा हैंड, इसमें बहुत सारी लाइंस होती हैं। सो जो एजुकेशन की लाइन तुम्हारी है, विद्या की लाइन, जो पढ़ाई की लाइन है, वो है ही नहीं। उसने कहा कैसे नहीं? तो उन्होंने उस क्लास के सबसे होशियार बच्चे को बुलाया और उसके गुरु ने कहा, देखो इसके हाथ में ये वाली लाइन है, ये वाली, और ये वाली होती है पढ़ाई की लाइन, और तुम्हारे हाथ में वो लाइन है ही नहीं, तो तुम नहीं पढ़ सकते। तुम्हारे भविष्य में पढ़ाई है ही नहीं, हम नहीं पढ़ा सकते तुम। तो बच्चे को बहुत हर्ट हुआ, जबकि वो पढ़ना चाहता था, उसको समझ से चीजें नहीं आती थी, बट उसका ऐसा नहीं, पढ़ने का मन नहीं था, वो बहुत पढ़ने की कोशिश करता था। तो तुम्हें भगवान ने पढ़ने के लिए बनाया ही नहीं है, बिकॉज तुम्हारे हाथ में तो लाइन ही नहीं है पढ़ने की। तो उसको बहुत गुस्सा आया, बहुत हर्ट हुआ। तो वो गया किचन में वहां के, और वहां से एक उसने चाकू लिया, एक शार्प चीज, और उसने जहां वो लाइन उसके गुरु ने बताई थी, वहां वो लाइन उसने उस चाकू से बनाई। सो स्टार्ट ब्लीडिंग, खून निकलना शुरू हुआ। लाइन बनाने के बाद वो वहीं पहुंचा जो सारे गुरु थे। उसने कहा, गुरु जी देखो, मेरे अब लाइन बन गई है। तो लाइन बन गई है मतलब अब तो मैं पढ़ सकता हूँ, अब तो मुझे मतलब समझ आएगी सब कुछ। भगवान ने मेरी लाइन नहीं बनाई, बट मैंने बना दी। ये सुनकर सारे गुरु बहुत आश्चर्यचकित हुए। उन्होंने कहा, वाह क्या कमिटमेंट है इस बच्चे का। और ये सोचकर फिर उन्होंने बिल्कुल डिसाइड करा कि हम इसे पढ़ाएंगे, बहुत पढ़ाएंगे। और वो बच्चा बड़ा होकर संस्कृत का सबसे बड़ा विद्वान, पढ़नी, एक विद्वान थे संस्कृत के शायद, वो बना। उन्होंने संस्कृत के सबसे बड़े महाकाव्य की रचना भी करी, बहुत बड़े बड़े ग्रंथ लिखे। और इस बात से हमें क्या समझ आता है कि अगर आप मेहनत करने के लिए आप डिसाइड कर लें, आप ठान लें कि आपको ये काम करना ही है, तो हाथ की लकीरें, डेस्टिनी, ये सब चीजें बाद में आएंगी। पहले आप डिटरमाइनेट कीजिए खुद को, खुद को फोकस कीजिए, कमिटेड कीजिए कि मुझे ये काम करना है। तो अगर इस चीज के लिए आप तैयार हैं, तो फिर वो क्या कहते हैं ना, सारी कायनात भी इसी काम में लग जाती है आपकी विश को पूरा करने में। तो फिर मेन चीज, फोकस, कमिट, एंड यू विल सक्सीड। सो दिस वाज आवर सेशन रिगार्डिंग द कैपिटल गेन प्रोविजन। वी हैव डिस्कस ऑल द प्रोविजन रिगार्डिंग कैपिटल गेन। एंड मेरी बस एक बात याद रखिए, प्लीज रिवाइज ट्वाइस, दैट्स माय एडवाइस टू मेक यू वाइज। एनी वन ऑफ यू इफ फील दैट टुडे वी आर नॉट एबल टू अंडरस्टैंड द कैलकुलेशन ऑफ टैक्स, so please, it's a request, kindly go and revise chapter number 1, basic rates provisions, the rebate concept, the surcharge, the education cess, the slab rate concept. Then take the lecture again, see the provision, how to calculate the tax, and then again try the question what we discussed today. And I promise you, you will able to solve all questions very easily. And please follow that provision when I told you, whenever you have to calculate tax, kindly divide into 5 category and then put the value of income. And that will amazingly help you to solve these kind of tax calculations provision, and will really automatically the deduction you will not going to claim from other income, the rebate you will know from which income we can claim, how to transfer the exemption concept, first of all from the other income, then from the long term 20%, then 111A, then 112A. And casual income cannot have that. Non-resident cannot claim the exemption, fixed income, except in basic, except the other income part. So please revise this chapter or today session only after once you have completed your chapter number 1 provision. So that will really help you to understand the provisions of today's chapter. Now we'll meet on 26th of December. That will be my last session, and that will be for income from other source. Till that, good day, and please study very hard, and we will see you again. Merry Christmas till that. So Manish ji, can we close the session?